Hey everybody, it's Daniel here from InfoRest. Hope you're all doing well. So, Shark Tank investor Kevin O'Leary says that it's weird that there's no recession here yet. And also says that predicts mortgage rates will exceed 8%. Again, this comes from Business Insider. I'll leave the link in the description for you to read up on it. But it's very interesting that, this is not the first to hear people say that it's weird we're not in a recession. And a lot of people also who were predicting recession this year changed their calls to now soft landing, especially a lot of the banks saying that, hey, okay, no recession. It's probably going to be a soft landing. Some of the economists saying, hey, no recession. Probably going to be a soft landing. Well, if that's the case, if that's the theme, well, then what does that mean for inflation? What does that mean for growth, for the economy heading forward? Does it make sense to start cutting rates all of a sudden if, okay, soft landing, things are fine? And you've got literally, an economic war between the West and the East, supply chains still disrupted. Does that mean that, prices are going to come down magically all of a sudden? Or, or not? Well, if that's the case, then Kevin Leary may be actually right that mortgage rates could exceed 8% or higher because guess what? The central banks will ramp it up. We heard from Jerome Powell in the past. We heard him say that, hey, I am going to hit the I'm rephrasing him, but he said 2% is the target. 2% is the target. To get to 2%, they're going to keep conditions tight. And Jerome Powell said also in the Jackson Hole event 3-4 couple of times saying that in order to get the inflation level down, we're going to need help from the labor market, which means the labor market's got to soften. It's got to soften. So if it's not softening and things are still fine, then yes, it makes sense for mortgage rates and interest rates to go up. It makes sense that, we could see 8%, exceed 8%, maybe 9, maybe 10%. And then maybe something like the bubble or some sort of credit event that may come up finally show its true colors, right? But a good economy, good data doesn't necessarily mean that that's fantastic and that, rates are now going to come down. That actually pushes the rate cuts further away and causes rates to be higher for longer. And if your mortgage renewals or whatever are coming up for renewal at the end of this year or next year, then definitely you're going to also see an inflow of people come out and say, hey, I can't pay this. It's too high up. Maybe they'll go out and try to look for, a second job and so on. And why is this also surprising? Now Kevin O'Leary said that, it's weird that there's no recession yet. And why is this surprising? Because like me, everyone else was so focused on monetary policy. We completely forgot about fiscal policy. There was a lot that was done on the fiscal side that pumped a lot of money. The checks that went out during COVID time, the acts, the bills, whether it's the EV bill or giving more money to companies out there, giving them bailouts, right? These loans that you never have to pay ever again, etc., chip bills and etc., right? Just more free money to the companies out there that are going out there and saying, hey, we got this excess cash here, we can hire, we can do whatever we want, we can withstand and don't need to fire anybody, right? Even though some companies are laying off and some companies have come to somewhat of a halt when it comes to hiring, others may be still hiring, right? You're seeing the lasting effects of that free money, that free cash from COVID and still today from the fiscal side. Monetary side from the central banks have completely reversed. You're seeing complete tightening. So you've got fuel feeding the fire, fuel which is the fiscal money feeding the fire, and then you've got the water, right, from the central bank trying to cool the fire. So you got fuel and water at the same time. And the fuel is quite heavy because the fiscal side of things is what probably is keeping the market propped up, keeping the economy still fine, looking like, hey, there's no recession, right? Causing companies to maybe lift also the wages, lift the hourly wages, the salaries of people, which then translate into people still spending, going to Taylor Swift concerts, etc., right? And that's why maybe we are not seeing this recession and why it's taking its time. And if until more tightening is done and the fiscal side of things start to really slow down, people start to slow down their spending. And where would the slowdown in spending come from? Probably from the companies that decide to, hey, we need to lay off workers. And then if that happens, you get the layoffs and the unemployment rate to move up, job losses to increase. Then yes, the demand will fall heavily, and you will see that, okay, now you've got the recession coming in. So let's see. Maybe it's still too early. It could happen, tomorrow. It could happen at the end of the year. We could see this effect next year. Time will tell. Let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified on the next video, and I'll see you guys around. Cheers, bye.